Hi, everyone. This is Christine Kopr with Sotheby's International Realty Canada in Vancouver with our March 2022 market update. Okay, let's get started. The market is changing, but hold up. It is a little bit calmer, but it's still elevated. And let me put this in perspective for you. We are seeing a sales ratio of over 57%. So a seller's market is considered at 22% and above when we talk about sales ratio, which is the absorption rate. How fast are things selling? It's one of our stats. 57% is incredibly strong. Over 57% of all the homes are selling that are on the market. Now, that also means that there's over 40% that's not selling, but just keep in mind, although we're seeing some shifts, and part of that is starting to see a little bit of trickling up of inventory, there is a major deficit, and it's still a very strong and very active market. There are a couple of things to look out for on the horizon, but let's quickly look at where things ended for March. Okay, here is the screen we want to share. All right, so as you know, every month I like to go over this graph here. It is what we call my months, my graph here. It goes over our sales, but it also talks about months of inventory, and months of inventory is excellent because it gives you a really good idea of which way the market should be going if the sales and the inventory levels continue to be where they're at. So as a brief recap in terms of months of inventory, and that's that number down here, 4 months or below of inventory is considered a buy or seller's market. So 4 months or below, and 6 months and above of inventory is considered a buyer's market. That's the market that all the buyers are hoping for. Sellers are looking for 4 months and below, and between 4 and 6 months is considered a balanced market. So I look at that all the time. I refer to this graph every month to see where are things going with the marketplace. Now, January, we saw 4,344 sales. That's down 24% year over year. And you're going to hear a lot about this in the news about things slowing down. But let's back up the truck a little bit. Last March, which is the month we're comparing to, was the highest selling month ever on the real estate board of Greater Vancouver, not just for March, but all months ever. It was a record 5,708 sales last month of March. So when we're going to compare to that, of course, we're going to be down. 4,344 sales is excellent and a very strong market, and it shows you the demand that we currently have. So year over year, we're down 24%. However, month over month, our sales are up 27%, and our sales last month were 26% above the 10-year average. Now, new listings, this is a number that we really want to keep our eyes on. And that's because inventory has been the major factor of our market and putting a lot of pressure on prices. There just hasn't been enough inventory to satiate the demand. So we want to see some inventory coming on, and you can see between January and March, we've had more new listings come on the market. So 6,673 listings have come on. That's down 19% year over year. It's also up 22% month over month. Now, let's remember last spring was one of the craziest markets that we had, and we had even more inventory on the market at that time. All right. Active listings. This is the total amount of inventory that's available for people to purchase right now. We're sitting at 7,628 active listings. That's down 17% year over year. So we have less listings than we did last year, and it's up 13% month over month. So we are starting to see that little bit of inventory creeping into the marketplace, as evidence sometimes is maybe not getting as many offers, and in some cases, sometimes no offers at all on offer dates. Now, of course, you have to take pricing into consideration, etc. But anyhow, we are starting to see just a little bit more option out there for buyers. Now, what does that do in terms of our months of inventory? So we take our total active listings and we go, all right, we have 7,628 homes available for you to buy. If we continue to sell 4,344 homes every month, we only have 1.8 months of inventory. That's how we determine that calculation. You divide active listings by the sales. 1.8 months of inventory is like no inventory. There's definitely upward pressure on prices, and it's reflected in our benchmark price. Current benchmark price is 1.360. That is up 21% year over year and 3.6% month over month. Those are, again, another very strong month of upward pressure on prices. Now, I have to admit, it depends on what kind of properties you're looking at. If you're looking at, over $4 million houses on the website that are a large lot with a tear down house, different than your more entry level detached homes or newer homes or east side properties. Now, looking at some of the other specific numbers. So detached homes, we had 1,291 sales. That's down 34% year over year, but it's up 95% month over month. 95% more detached sales last month in all the board of Greater Vancouver. Your benchmark price is now sitting at 2.118 million. Wow. Up 20%, 23% year over year and 3.6% month over month. Townhouse sales are sitting at 743 sales, down 29% year over year. So sales are down from last year, but up 87% month over month. And your benchmark price for a townhome in Vancouver or Greater Vancouver is sitting at 1.138 million. That's up 28% year over year and up 4.4% month over month. Lastly, our condo sales are sitting at 2,310 sales. That's down 14% year over year, but up 25% month over month. Your benchmark price for a condo is $836,000, up 17% year over year and up 3.4% month over month. So as you can see, we are still in a very, very strong market. We do have a couple of headwinds that everybody is keeping an eye on. Consumer confidence is one of the big ones. And, from that is interest rates. It's been the big talk. We're expecting potentially, some of the banks are expecting a 50 basis point increase next week at the next Bank of Canada meeting. This is going to affect anybody with a variable rate mortgage. Okay. The benchmark rate potentially will go up. So we're going to see if we're going to see a 50 basis point increase or maybe just a 25 point or 0.25% increase next week. Let me know what your bet is. My guess it's going to be between 1/4 to 1/2, but I'm going to stay on the steady Eddie conservative side and guess that they're going to go with a 1/4 point increase. Either way is fine. Fixed rates have been increasing steadily over the last couple of months. The 5-year fixed term rates that's set by the bond market, there's been a big rally in the bond market. So anyone who's tried to get a mortgage recently will see that those rates have gone up. If you're thinking about getting in the market or doing a refinancing, make sure you're in touch with your mortgage broker and getting a rate hold. So if you can use it, great. If you don't, no big deal. And of course, if rates happen to go down in the future, you can secure that lower rate. So if you're thinking about what to do, there's also the qualifying rate. My guess is there's quite a big spread currently between the variable and the fixed term rate. These days you're seeing closer to 3.75 to 4% for fixed term rate, but you can still get variable at 1.75. So even if you had 1/4 point, like 7 1/4 point interest rates at 1.75, you'd go to 2%, 2.25, 2.5, 2.75, 3, 3.25, 3.5, 3.75 is 8. 8 1/4 point increases to get to today's 5-year fixed term rate. And then you have to ask yourself, how fast could that happen? And you know, if things start to straighten out into the future, our rate's going to come back down as they have historically. If you want to chat about it some more, I'd love to do that. And I'd love for you to click subscribe and make sure you follow our YouTube channel for more interesting market information. And we welcome the opportunity to connect with you and answer any of your real estate questions. I'm Christine Kopr with Sotheby's International Realty. And with that, I'll see you soon.